All right. Happy Friday, everybody. I am back after a 2 week break. The first one was 4th of July. Happy birthday, America. And the second one last week was just me being a little pansy and being in my feels and having a little pity party. But I'm over that now. And that's because it just seems like you got to embrace a little bit of your inner retard. And I think I'm going to put a narrative on what's going on right now has to do with people trying to front run this idea that Trump is going to get to just wave a magic wand and replace Jerome Powell, who has been stymieing his efforts to get interest rates down because interest rates would be great for everyone if they were low, right? We get cheaper mortgages, mainly risk assets would go up, crypto would pump, yada, yada, yada. And everyone would be happy. Not to mention we get to refinance the United States debt at a lower rate. But is that actually possible from happening? I'm gonna use a little bit of same thing I use for everything nowadays, which is ChatGPT to go through and educate myself and anyone that cares to actually know what is the process for actually replacing the Fed chair. Also, I've been doing a lot of research this week on trying to come up with functional versus speculative value when it comes to Bitcoin. Really searching on Monero because I want to model the growth of Monero as far as its functional value. And then we'll talk about some trade setups this week in futures that did pretty good and remind me that I don't completely suck at trading. So hang on through the music. We will come in. I'll be right back. Do, 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 do. Hey, how's it going, guys? I'm back. Actually, I was trying to figure out how to pop out my chat. I'm back. Actually, and it didn't let me do it. So give me a second here to figure out why that didn't do. Hang on a second. I need to verify my channel. I wish I would have known to do that before. Hang on. Hang on a second. Give me a second, because I should have noticed that. Sorry, guys. Let me see if I can get chat going. If I don't have to redo the whole thing. Let's see. Well, if we can chat on Discord, by the way. Link should be at the bottom of the thing. You guys should join anyway. Come hang out. It's where I post things in real time, and I like to talk and generate ideas. Let's see. I'm trying to find out where is. I'm wondering if the reason I don't have chat is because they added the requirement to verification. I've had this YouTube for several years now. Build history. Let's see. Your channel history is being set. What? Hang on. Audience. Oh, there we go. Okay. No, it's not disabled. Hold on. 1 second. Let's get a quick thing in here. So, how to 1 second. Bear with me. And navigate to live chat. Live chat. Live chat. Live chat. Okay. Hang on. There we go. Okay. Chat's up. That's my bad. All right. You can't have. Oh, I know what I did. I clicked on this is for kids because I thought I was not going to cuss, but if you have kids on, they can't be in the chat. That makes sense. That makes a lot of sense. That makes a lot of sense. So now I can say cuss words. That's fine. All right. Get things organized then. Good to see you guys. All right. Well, like I was saying, I have a little bit of a confession. Last week, I was having a little pity party for myself, like anyone that I think has traded anything has done at some point. Because yeah, like I just feel it. Oh, ah, whoa, hold on, I just messed something up. Oh no, I feel like I just can't embrace my inner retard. Like I've got some good friends of mine that are like coming at me and telling me like, bro, you need to buy Ripple, man. Like the millionaires of a decade ago, they bought Bitcoin. The future millionaires, they're buying Ripple. And look, it's all owned by like a central company and it's not decentralized at all. I don't know that much about it except that it's got a price history. Hold on, Ripple USD that looks like this. I'll just mention some of the ones. Let's see. Yeah, we'll do that. So yeah, you basically have made a new high, but this thing has a series of and I'm going to trade. I'm going to look at this. I'm not going to trade this, but I'm going to look at this like any other ticker that I would, where what makes for a real all-time high is a close, a weekly close above. Oh man, okay. Did I do? I must have pressed that. Sorry. All right, guys. So I'm here. Yeah. Thanks for pointing that out to me. All right. Dude, I'm gonna like put a piece of tape over that mute button. Anyway, what I was saying was, I'm back. I don't know what you got from me, but um, I had a little bit of like 4th of July was the week ago, and last week was a pity party because I just don't think I can embrace my inner retard to really understand this. I think I might have pressed it while I was talking, but what I'm going to look at with some of these cryptocurrencies. And by the way, if you have things to post in the chat that you like, your favorites, I'm more happy to evaluate them. But there's going to be one thing I'm going to look at here with any crypto, and that's going to be what Bitcoin did last week, which is a big green dildo bar. And that's what you want to see when you break out of an all-time high. You want to see a close, big close that breaks above the prior all-time high. Okay, this bar, and this right here. I had some people ask me like, "Hey man, is that doji?" I don't care. It doesn't matter to me. I don't. My brain's too small to remember those chart patterns. All I'm looking for is closes and other things that I look for, especially when it comes to uh, big price rips. And what I was saying earlier, I don't know if the mic was cut off, but another big favorite that everyone on Twitter is memeing about is, of course, Ripple. And if we go to Ripple on the weekly, it's just barely poking its head still above it. If this bar closes under 3.4 this weekend, Sunday night, that is going to be a failure breakout. And the other one is Ethereum. And you know what? I got a friend in my Discord that just keeps on repeating Ethereum to 20K. I kind of hope he's right because he's been consistent about it. I don't know why. I still think that Ethereum is dead. I don't think people actually use it. I think Solana has kind of taken it, but that's been my thesis. And you know what? That's why narratives aren't really good for trading. And so Ethereum just keeps pushing past levels that I might draw for it. But if we take off the volume profile levels, trying to understand where it is, what does it really look like over the long term? We don't have anything that really tells us that we're going on any kind of tear. What I would want to see is close, a big weekly close over 48.67. And I know that's $1,000 or more away, and people are gonna FOMO that, but you just don't have the confirmation. And as I was saying before, with Bitcoin for the most of this year, you had an all-time high that was set in December. This is a weekly chart. You had a failure to break out from it there, and that led to the April move down. And then on a smaller scale, you had a failed breakout once again on the weekly that led to a little small pullback there. So those are the kind of things that will give you pullbacks when you see that. And if you're really bullish on it, then that can be a sign to catch it on the pullback. But I got a friend of mine, we'll look at H bar. I got a friend of mine that wants me to, he told me yesterday, you need to buy CRV. And I don't even know what this is. But I don't like it. Now it could be one of those that's a bag hold that rips and all that good stuff. But I just you're not going to get me to jump into something right now. I'm gonna have fun staying poor. Honestly, I only want to buy stuff that's dead, and I'm going to be patient for that. So let's see. Let's take a look at the H bar. Yeah, if you got things to look at, bring them to me because this is the time to. I mean, think you got movement coming on, and so this is the time to do this. Hold on a second. So yeah, H bar, market cap. Let's do USDT. This is another thing that one of my crypto friends that constantly sending me stuff to. Yeah, he definitely has been in H bar for a long time. I got alerts down here. Never really triggered them that I would have maybe considered it. Everything's pumping, and that kind of goes to the point of this live stream I want to break down because I think what's driving this is people trying to front run Jerome Powell being replaced. And is that really going to be bullish for everything? I think people think it is. And I've seen rumors, I've seen tweets talking about how Trump is going to fire Jerome Powell and replace it with Scott Bessent. He's our guy in the crypto space, right? So he likes crypto, and he likes those big green dildos as well. And I just don't know if that's actually uh, going to actually translate into that, because what everyone's looking at, or at least people when they're talking about interest rates, they talk about yields. Okay. And so the big yield that everyone looks at is the 10-year treasury yield. Now, treasury yields are not interest rates. They are forward looking, they're speculative, they're what the market thinks that the interest rates on this duration of debt are going to be. And if the broader market really believed that we were going to get lower rates, you would see this thing have moved with all this buzz. Okay. But it hasn't. Anytime you see the 10-year go above 4.5, you'll see in the media, you'll see in the news that they print that we're going to enter into a death spiral. And now that it comes back to where it's been for literally the last 2 years, media goes quiet because it's not a big deal. But it matters. It matters because the U.S. has to constantly be recycling, has to constantly be reissuing its debt out, the short-term debt, to all the debt that it has, all the treasury bills that it has to be constantly reissuing it. And it costs more to reissue this debt at higher rates. But you can see that, if you have a 10-year bond 10 years ago, back in 2015, you were financing that debt at 2%. Now, when that 10-year note matures, and there's trillions of dollars of it, among other tranches of duration, now you're having to refinance at 4.5. So ideally, what everyone wants is for interest rates to be low. It makes mortgages lower. It makes the money supply expand. It lets people go take out loans to buy more crypto and pump the market up, as well as buy stock. It's just happy time. Do you guys remember back in 2021 how great, how awesome everything was when uh, we had very, very cheap interest rates, very cheap money, very low interest rates? I mean, like crypto moon, Ethereum, everything. Oh yeah, like just it was a big money bonanza. Okay, and then things came back to reality, and then now we live in the current year. But people want to see this again because this is fun, isn't it fun? I mean, when I started my Discord and I started my channel, so many people were actively day trading, mainly because people were working from home. They had their stimmy checks and PPP loans. There's just a ton of money going around, and like it just hasn't been as fun these last couple of years, has it? Having to actually have like interest rates, paying interest on stuff. Like if you take out debt at 0%, you're sort of like, oh, who cares? I'll just pay it off whenever. But when you have interest and that debt can actually grow if you don't pay it, then you actually have to make smart decisions about your what you put that money into. Yeah. But that's the best way I can say to explain. There's been a lot of things that my friends have been looking into, like things that have been dead for a long time, like laser Luminar Technologies. I know it doesn't look like it, but they're getting a little pump off the bottom. Actually, they're not at all. What are they doing? Tell me that. Okay, LiDAR, I think it was. All right, no, it's LiDAR. LIDR. Maybe. Yeah. Well, not really yet. Not really yet. But so let's just kind of cut through all that buzz. I want to kind of use ChatGPT because this is the topic of today, and then we'll talk about my research that I've been doing on trying to calculate the functional versus the speculative value of cryptocurrency, mainly Bitcoin. But mainly, I was trying to get to a model for Monero because, as you know, that is my favorite cryptocurrency, and it's not going to make you rich. Sorry, if you're interested in your pumps like your H bar and things like that, go nuts, have fun. CRV, I mean, those are fun. Ethereum, things like that. Actually, Ethereum is in my modeling. I'll show that here in a minute, the things I came up with. But I'm actually more interested in the growth of the functional market share. In other words, people using cryptocurrency for transactions like they do with Monero. Yes, much of that is on the dark web. The other ones are on gift cards and other such things. And there's been a lot of other data points of people actually using Monero to buy and sell things. It's basically captured the functional market because it is essentially private money that doesn't involve having to do multi-layer solutions like Lightning and things like that. Which again, it's not really good to use Lightning because you have to create your own node, and that's going to either involve KYC or it's going to involve lacking a little bit of privacy as well as complication. Just use Monero, bro. So we'll look at that in just a second. But first, everyone's talking about Trump firing Jerome Powell, but he can't actually do that. I know that just off the top of my head, that the Fed chairman has to be taken out from, was because of due cause. Okay, all right, I know that off the top of my head. He can't do it, okay? But what are the grounds that Trump could remove Jerome Powell? And we'll see. Let's do ChatGPT 3 from quickerness. And I've been really spending a lot of time GPT and I. He's my friend. Whatever. For doing a lot of this modeling. It's not the best for financial modeling because you constantly have to keep remembering it. It's got a little bit of Alzheimer's, and but I've got some cool stuff that I'm going to show here in just a second that I came up with this week. Hold on a second. So things like this, I'll kind of tease. I'll get to this next, but like this, which is where I try to look at the functional versus the speculative market cap. This is a Bitcoin. Go into a little bit more granular and talk about it a little bit, but let's talk about the Fed thing first. So it needs to be like if it's he's being inefficiency. Well, I don't know what that means. I mean, I guess if he doesn't show up to work, neglection duty or malfeasance. Man, this is for cause, and I guess that does leave room for interpretation. But here's the thing: just because Trump fires or gets rid of Jerome Powell doesn't mean he just gets to select somebody. The process involves picking one of the 14 governors that are existing. So I want to really kind of bottom line, legally cognizable grounds are confined to traditional tribe, inefficiency, elected duty, malfeasance, supported by evidence. And look, Fed chairmen are not, let's just say, like, they're not really, you don't see them outside of, their press conferences they do a few times a month. They keep their nose clean because, I mean, they above all other, let's just call it representatives of the United States, which is what they are, have to maintain a sense of stability because this whole fiat thing that everyone says that the American dollar is going to fail because people will lose faith in it. Well, you have to have faith in the dollar, and if Jerome Powell shows up drunk to one of these meetings, or Janet Yellen had, that's going to affect a lot. So you won't see them really doing crazy things like banging interns or anything like that. Or hey, who knows? Who knows? It's not that sexy of a position, so I don't think girls are really into Fed chairman, basically, like they would a president or a senator or something like that, or a CEO of a tech startup. But I mean, like, I don't know if you guys saw that or not. That's been the kind of the scandalous thing. What is it? CEO cheating. This big scandal where this guy was caught on a camera. They basically went to camera like a kiss cam, and he's cheating on his wife with his head of HR at a Coldplay concert. And so this is a good reason for why you never get seen at a Coldplay concert. And so hey, what's up, TR? Yeah, I'll look at those. Hey, make sure you put the things in the chat. If you're liking things, make sure you like, share, subscribe, all that good stuff for the algorithms. And make sure to join the Discord where I post trades like SRPT this week, which is something else I got to talk about. I didn't even look at the closing price because, man, I made a post about how that stock scares me. And it proved me right. We'll talk about it here in a second. We'll get to it. But so I don't see him removing him for grounds. He may leave, but also his term is going to be up in May of next year anyway. So it seems like everyone's just being kind of presumptuous. I think it's just buzz, honestly, but I could be wrong. They could actually do something. But let's see. How is the Fed chair chosen? See if I'm right about the 14 governors thing. So the Fed Reserve creates a board of governors. Each holds a single 14-year term. I think that's the 14. The Fed chair is not a separate office with its own seat. Instead, it's from among the sitting yes. The president designates one chair for a 4-year term. Okay, so it has to be, that's the key. It has to be one of the 7 governors. Sorry, the 14-year was the 14 I had. There's 7 governors. That's 14 sound like a lot. Okay. So and also what has to happen is it comes from the 7 governors that are existing. There's one in different cities. I know there's one in St. Louis. There's one here in Atlanta. There's definitely one in New York. I don't know the rest of them. But the president has to nominate it, and the Senate has to confirm it. Now, of course, I mean, the Senate is kind of, it's dominated by, I think that's another reason he probably wants to get it done. But that's the thing, that the Fed chairman is going to be out in May of next year if Jerome, I think, leaves or doesn't get reappointed, however that works. So they're still going to have control of the Senate. But yeah, I don't see it not going through Senate confirmation. And plus, everybody loves cheaper rates. If we're getting a new Fed chairman that's going to lower rates, which is not necessarily guaranteed, yeah, I don't think he'll fail in that. And so, yeah. So he has to be picked from one of the 7. Okay. We don't really need all these things right here, but let's see. How are these 7 governors chosen? Who are they now? And what do we know about their opinions on the current interest rate decisions, retaining to potentially lowering them? Now, what I know is that, the decision on interest rates isn't just the Fed chair just saying like their rates are going to be exactly that. It comes from a vote from them. Okay. And the chairman is the one that just speaks about it. So it's really doesn't like the chairman is really just the figurehead. I mean, but all 7 have to basically vote on what the rates are going to do. And we can go back and we can look at how the votes have gone for the last couple of votes for the decisions. It happens about once a month. They decide or not. And obviously, they haven't decided to lower rates based on unemployment numbers, the inflation numbers, and things like that. But I think the votes are public, so we'll look at that next. So the governors are chosen. There's 14-year terms. Is filled by each seat on the board. Okay, I didn't know this. Each seat on the board of governors is filled by presidential nomination and Senate confirmation. Aha. So to really, and they're staggered. So that's pretty good. That's somewhat better check and balance that we even have in Congress, actually. A full governor term is 14 years, and one term commencing every even numbered year on February the 1st. Okay, so so it's probably like 2 every year. A governor who serves a full 14-year term cannot be reappointed, but someone appointed to complete an unexpired term. Okay. Current board. Jerome Powell, he's the chief. Philip, Michael Barr. Okay, so these are the people right here. Let's see. Distribution of views. So advocating to cut in July, open to cut July. So these are the opinions that they have, that they talk about. They release very, they don't release their full opinions like, man, I think, no, they can be very concise about it. But from this, Waller is strong. One Fed governor is strongly advocating. Cautious would be Powell, and preferring to hold is Barr. So we have 1, 2, 3 that are in the middle, and 1, 2 which are against, and 1 which is for. So that's where the distribution lies in the governors right now. And so if you replace Powell, you still aren't going to really replace these. We'll see if it actually tells me which ones are up for replacement. Which governors are up for replacement next year? Let's see if it is some of the people holding out. because that would be what one would have to do if they were president. They would have to put in members. They would have to put in, excuse me, governors that would be in favor of it, but they're only going to get to do two. We'll see, maybe one, because it's every 14-year terms. But this is the process isn't just the president gets to do this, and nor do we want that. I mean, come on, like I try to be libertarian where I can be. I don't want the president getting that kind of power, no matter who it is, at all. President now controls interest rates by like no, that sounds like a horrible idea. So yeah. All right. So only one governor, Kugler, Adriana Kugler, ends on January 31st. And if we see up here, Kugler is she is a preference to hold. So the best really that Trump can do within his authority is he can replace one person that is wanting to hold rates. Okay. And is one of the stronger holds, which will affect the vote a little bit. And then he can replace who is the actual chairman of it, who is the leader of the seven. So I think it's just a little bit of talk. I don't think that Trump is really going to be able to change interest rates. I don't. And so I keep hearing all this stuff about Jerome Powell getting fired, Scott Bessent going to replace. I mean, okay, that's fair. What can happen is he could actually replace Kugler next year, not now, and he could definitely get out Jerome Powell. But I think Jerome Powell would just go back. Hold on. If Powell is removed as chair next May by Trump, is he still a governor? That's really the key. I mean, I don't think that just because he gets taken out, unless he's also removed for cause, which they're not going to do that. I don't think. Let me not say never say never. I don't think that they're going to remove him because that's a really bad precedent to set. You kick out somebody, make up some crap about them. I don't know. We'll see. Dumb things can happen, but I don't think that's going to happen. So he's still going to be governor. He's still going to vote what he thinks about interest rates. And so I just don't think we're going to have anything change. And you know what? Without even going into any of that analysis to educate myself and you guys on what is likely or not likely to happen, if we just look at rates, like this is the 2-year, the 5-year, the 10-year, the 30-year. There's not been a big drop in what the market is expecting on interest rates. I think the market is pricing in the interest rates are going to stay the same. And that's what I've been saying for quite a while. I am fully engaging in recency bias in that I am choosing to believe that what has continued in the past is going to continue into the future. I think that's the most logical thing that is going to happen. So when you see these things on Twitter about how Trump is going to fire Jerome Powell to get interest rates down, and once interest rates are down, everything can moon. I don't think that's going to happen. I think things are mooning for one simple reason right now. Apart from what I said is because of front running. We're in a bull market. So one of my favorite books is Reminiscences of a Stock Operator. This book was written in the 1920s. And so that was a long time ago, 100 years ago now, 100 years ago. And you really need to pick up that book. If you're serious about trading and investing, just go buy it. It's really cool. Buy the Amazon annotated version. It has a picture of a building on it that has like little cool history facts that are in the margins. But it's written as sort of a quasi life story of Jesse Livermore, who was a trader 100 years ago. And he's recounting stories about people he met on Wall Street. And I tell you something, if you read some of these accounts, some of these, conversations that they have talked about when it comes to what traders would say and talk about stuff like cotton and, railroad stocks and, telegraph stocks and stuff like that. They were the big tech stuff and, transportation, big industries of the day. You're going to recognize uh, a pattern of the same kind of like the same things you see people tweet about shit coins and crypto, or whatever the latest meme is, with pot stocks and everything, as the case were, whatever it is, you're going to hear the same things. You're like, wow, people don't change. And one of the things that I remember reading, this guy would say, he was an old guy, old in 1920. Little kid might come up to him and say, like, hey, there's this hot stock. It's great. It's going to go up because of this reason. I've done all this analysis. And the old trader would just stand back and he would say, it's a bull market. And so what that basically means is, in a time like this, well, in a time like this week or the last couple of weeks, I don't know, actually, this is starting to concern me a little bit. This is the S&P 500 futures. I don't like it when you have something like this, like when you have this, this little creep up. No, you need some, excuse me. I want something like this, or more better yet, that where you already had the dip and you come back to a 50% retracement, right there to re-enter. Because man, it's hard for me to buy something like this. It's hard for me. It's like the friends of mine in crypto. They're trying to get me to buy all the shit coins that they're making a lot of money off of right now, making me feel bad that I'm not retarded enough to just YOLO in. I feel bad, guys. I do. Like, I feel like, what am I doing? Trying to be smart and manage risk. Everybody's making money. Well, the simple answer is own something going into these things. But I don't chase. You cannot get me to chase. You cannot get me to chase. Not going to do it. I've seen too much. I've seen too many bubbles. I've seen what happens when we get to this phase and everybody is super happy. That's reflected in price. And yeah, I'll wait. I'll have fun staying poor until everyone is saying that something is dead. So that's just me. It's kept me alive for over a decade. But it feels bad. It really does. Oh, because you want to win. I want to win, and everybody else seems to be winning. But the reality is, I own stocks. I own shares. Option trading is fun only. When I like a company, I own it. And yeah, I don't make 100%, 200,000% year-over-year gains, but if you own assets in an inflationary environment, you're gonna do okay. At least you have so far. So, all right. Like I said, if you got symbols to put up, we'll talk about them in just a second. Let me share my research, and this is a work in progress. This has to do with Bitcoin and Monero primarily, but also through Ethereum in there too, because that's having some fun times. Actually, here's the close kind of coming down a little bit. But so is my favorite Monero. Oh no, but that's fine. I want Monero to go down. I'm trying to model a range for Monero. Like, what is the bottom point range? Because look, over its history, yes, it has had these spikes, these moons and stuff like that from, the various cycles, the various inflationary cycles, the alt season, or the 2021 season, that kind of stuff. And clearly I don't want to buy it at a high. But it was for the last several years that I've been talking about Monero, it would come down and it would make some really nice. This was the Bitfinex delisting, where basically it removed a lot of the potential for speculation. And that's one of the things I wanted to model was how much of the value based on market cap is a cryptocurrency based on its functional value, how much people use it for. What I wanted to do was I wanted to figure out, okay, so go back to 2011, Silk Road. Okay, that's the Silk Road era from 2011 to 2013. That was when Bitcoin was in its real nascent phase. People say like, "Oh, we're so early, bro." No. It's Wall Street's involved. You got corporate Ponzi's. This can go on for quite a long time, but we're not early, bro. Okay, We're at the point of adoption. Adoption. If I had a rainbow SpongeBob, adoption. But the early phase, people actually use Bitcoin as internet money, semi-anonymous internet money. And so a lot of the value was in just the transactional value, people buying stuff. And you can model that because the blockchain is the same. You can take the number of transactions in a given year, and you can say, okay, well, transactions that are like really big, like $1 million transactions, that's not people using it for buying stuff. Okay, that's for exchange rebalances or really big movements, that kind of stuff. But movements of like $100 to maybe about $1,000, that's probably people buying drugs. Okay, among other things, probably legitimate like socks and food and things like that. Sure, but you can kind of go in there and look at that, and a lot of and you can assume that like it's not exchanges either because arbitrages between exchanges, those are going to be really small. And so you can kind of pick between, let's say, as I did in my model, I looked for about like $100 to $1,000 and said, okay, these are functional transactions. Not all of them are, but it's good enough for estimations. And of course, if you go back to, the 2011, let's bring up this thing right here. And of course, I used ChatGPT to come up with this. Try to keep it from hallucinating. But again, I'm just working with a theory here. If you go all the way back to, hold on. If you go all the way back to 2011, as I'm doing here, let's put it up here. Where can I put the thing? Oh, tell you what, let's do this. There we go. So if you go all the way back to 2011, it's kind of small. I got another picture that will make that better. But as you see after the 2024, especially in 2021 and then 2024, you started having a lot more people buying Bitcoin and then not using it. ETFs, they just take Bitcoin and they lock it up. And so you see this explosion in non-functional value. In other words, the market cap is exploding, but the transactions that fall within that category of people potentially actually using it stays roughly about the same. And so therefore, I'm making the assumption that the value is speculative, and it's about 95% right now too. And what you can kind of find is, if you look at it, that's the functional market cap has kind of stayed the same. It's sort of, well, I got a caveat to this because up until this point in my research, I didn't include Lightning. And so, but it was being used functionally, increasing up to about 2016, and then really people started using it functionally up until about 2020, and now it's kind of flatlined. So people are, they're using it, but they're not declining in use, but they're definitely hodling because, well, it's going to be worth more later. Why would you spend it? And so then I started incorporating this. I started adding other cryptocurrencies into it. Okay. And I started looking at a lot of different things. Some of these, as you see, like Tron, Dash, Bitcoin Cash, things like that. They did have functional use. People were doing these kind of transactions long ago, but they've kind of tapered off. But the three major players are, of course, Monero, Bitcoin, and Ethereum. Now, you may ask a question, and it would be very correct to ask it. How are you calculating Monero? Well, because it's private. You can't really see the transaction sizes. No, you can't. But we know how many there are. And I am making the assumption that in this model, about 90% of it is functional. Now, there is probably more speculative in there that I don't know about. But here's the thing. As exchanges cut it off, and like Binance and the only place you can, and Coinbase has never offered Monero, because how would they report it to the government? It's private, so they don't. So as it's actually being structurally excluded from the speculative market, and a lot of people see that as a problem. Like, well, how am I going to win Lambo with Monero if I can't speculate on it? But that's not the point. What I want to know is the functional market of people using it as online internet cash, what's it doing? And so the transaction are going up, and the functional market, therefore, as the market cap goes up, is actually expanding too. And so Then I started sharing this with some Bitcoin maximalists who, of course, hated it that I was even talking about anything other than Bitcoin. And they said, well, what about Lightning? So I added in Lightning. Now, another caveat. There's a lot of private Lightning transactions out there. So we don't know everything, but we can kind of infer something once I include what we know in here. And that is that, yes, Lightning is actually starting to, again, this is broken up by Lightning, Bitcoin on chain up here, and then Bitcoin Lightning in here, and then Monero. And we can start to see a difference where, before it was a nice linear, chomping of Monero at the bottom of Bitcoin and everything else. And here we see, well, that's not exactly true. Lightning has actually come in and started, of course, taking up Bitcoin on chain transactions. We know that because the mempools are empty. People aren't using on chain Bitcoin very much. Why? Why would you pay fees? Why would you wait? You can do it free on Lightning. But it's definitely flattened the adoption and the market share capture of Monero, but it hasn't reversed it. It's just definitely flattening out. And it may be static based on that. And so I did a little projection. Now, this may be a little aggressive, but it does seem like Lightning is going to become more and more popular, and Monero slightly more popular, more and more. And this actually has a couple of implications. I think a lot of, the legends down here. So the dark blue is Bitcoin, and the light blue is Lightning. And this has some implications, especially for miners that are concerned that they're not going to have any revenue fees from doing their key role of processing on the network. I tried to convert this into a price floor by looking at, what is the rate of expansion of the functional market, and then Monero's capture of it. I'm not really happy with that. But at the end of the day, what I wanted to try to get to was, okay, what is the bounds that we can look at? And then what is going to be the regression? When is it good to buy? When is it good to sell? And well, like I said, it's a work in progress. But for right now, from a trading standpoint, on the daily, right now, I've started to use, we call these among my friends squiggles. It's the, I love my 50% retracements, and the last call on Monero in particular I made was for the 292 50%, which was really good, but also it was matching with the 90 or 89 EMA. So nice little confluence there that works. And so that was a really good place for now. This isn't going to move, but what I'm trying to model is how fast is Monero's market share? How fast is its market cap going to grow over the years? And it should be a good low double-digit percent. I know that's not what people want from crypto, but maybe I'm just old and I want something regular and predictable, and something I can believe in, like private money. Remember, I try to be libertarian. It's hard. It's hard because libertarians don't like political power, so they don't win. All right. Let's see. Let me check chat real quick. Oh man, I'm sorry. I haven't looked at Discord. I've been talking for a little bit. Yeah, let's look at stuff. Let's look at stuff. I promised that I would look at some trades from this week on futures. We'll see if we get time for that. I'll do it. All right, let me catch up on chat real quick. By the way, HBAR, I didn't mean HBAR should be bought right now. I was thinking about a potential future trade. Sure. It's always good to be looking for those and set alerts. For sure. That's how I want to do anything. I don't want to, I just can't jump into stuff. I bet you if you give a little bit of time, you'll get that same kind of confluence where 50% of 0.21 will probably match up with the EMA. I'm working on that. My friends really like to use exponential moving averages. I started my journey in trading using Ichimoku, and that's based around 50%. And so my mind just for a decade was focused on 50%. But longer than me, people have using EMAs. And you know what? After putting them on a chart and then watching to see, wait, what was it? Was it the 4 hour? Yeah. Especially this week, where my buddy caught a really good long off this one, off the 47, which was also, by the way, a volume profile level of the trend up. Boom. So confluences of 50% retracements and EMAs, particularly the 90 and the 200. I'm only going to add those two in my chart right now. Okay. Confluences between this volume profile and EMAs and 50% retracements. That's what I want to see. I want to see confluences. I will say that real quick, and then we'll look at symbols real quick. Hey, Zach Gordon, let me get to your shots. Hang on. So, Americans are more addicted to low rates than the biggest drug addicts in the world. Dude, low rates are fun, man. Don't you remember? Don't you remember people who get mortgages at 0%, or was it like 1%, 2%, 2%? Dude, some of my friends have 2% mortgages. It's crazy. What do you mean almost nobody says that about the dollar? That people are addicted to the dollar or addicted to low rates? Okay, let me show you, let me show what I mean by confluences. And this is futures trading. This is how I stay busy in the mornings. There were two setups, real good setups. One I did good, one I didn't do good. I had to run out on Tuesday of this week, and I got my good old spike. This was in the early morning, about 6:30. I was up way early that morning. I had things to do. That's the problem with mornings. Like, this is why I really recommend do as I say, not as I do. Because normally I follow my own advice to trade only within U.S. market hours. Like the open, you get a spike on open. Oh, that's gorgeous. But this one right here was a spike at basically about 6:30 a.m. Eastern. And I played this like I would a normal spike. And this is an indicator, by the way, that I use and I give away for free. And I'm actually going to reevaluate it. And that's because kind of added myself a little cheat in here because I always want to get a 3-to-1 risk reward ratio. And so what I do is I put the entry once it makes the spike at the red line, which is the Ichimoku Tenkan-sen. It's the 50% of the last 9 bars. And then I do an ATR calculation for your stop. And I want the stop to be just above that spike bar up there. Okay, just a little bit. All it should need, right? Well, if you size it, that's fine. But really what I should have done was, instead of just looking at an indicator like a robot, I should have shot for, the actual volume profile level. And then sticking with my 3-to-1, just put in the stop right there. But I had to leave the house. I saw this, and basically I let it ride. And it went and did what I know, if you've traded long enough, comes and pisses you off. It goes a little bit in your favor. And then because it's in the early morning, because you had a news event, it comes up and it stopped me out. But as you see, if I had focused not on the indicator like an AI robot that people sell, and I used my noggin, my brain, to find, okay, what's actually the level that price will retrace to, then I could still have gotten a 3-to-1 and been absolutely fine, even had a nice runner to go on. So my mistake, didn't feel too good about that, but redeemed. I am redeemed by Wednesday, because at this point, we now have a nice little bearish trend that I was not in. And by the way, I'm really hurting myself here because I really want to short the market. I can't buy it. I mean, I own stocks. I'm not selling them. And I'm not going out and buying puts thinking that I'm smarter than the market, but I'm just a contrarian at fault. And so I'm constantly looking for some kind of short setup. There's a nice little long down there, no spike, but that brought it up to, it's coming up on 9:30. Yeah. And so we have another spike. I believe this was a 1-minute spike. Yeah. So we got a 1-minute spike at the open. It's at a 50% level. Well, we got to update it. High to low, high to low. Boom. And I do believe also this was a matching volume profile for the last leg here. It's in there, but mainly it was a spike at the spike at the 50% level. This time I didn't make that same mistake. This time I said, okay, I want to take it back down to the 50%. And I got in at, again, standard rules, the red line, take it up to there, size my target, and then give myself a 3-to-1. Boom. Hung out, did its thing, and we got it. Take profit there at the 97 or 79 rather, and then got out the whole thing at 47. Why 47? Because again, it was that EMA. Oh, hang on. Was it a 30-minute? Well, I know for sure it was the, and that's the thing. I like 50% because they are very objective. Like a 50% of a trend is going to be on any time frame, but EMAs, it goes from time frame to time frame, you know. So let's see, what was that? That was it 4 hour? No. I had to do 30-minute or something. See, I have to work so hard to find where it is, but yeah, that was a nice little spike down to the 47 to get out of that short setup, that even setup on the one. And so that was my futures trading this week. One good, one bad. Made money, but both were spikes. Both were volatile spikes, and they all. But the best one was off of the confluence. In other words, if I had been the most picky, if I had said I only want to take the best trade of the week, it would have been that one trade. The other thing I can work on is making sure that I don't get too rigid with looking at my indicator. So, all right, let's look at symbols. Let's look at symbols for this week. All right. Let's see. UNH. UNH. I still have a long-term January call, and I had an August call sold against it. In other words, whenever it went up and re-hit, probably when it hit back in June, on this little leg up, I have a January, I think 300 call on UNH still. I bought shares as well. But I also have a call because options are fun. Yay. And I sold a August 380 against it. And so I was able to offset all this theta decay for the last month as it was just hanging out. Okay. So obviously what we can tell from this is not going to be a V-shaped recovery. All right. So you have, this is not like a textbook I'm writing here, but you basically have two ways that something that dies, something that tanks, can recover. You're either going to have a V bottom. Let's get off the. There we go. You either have a V bottom where it just immediately comes back, or you have a situation that is much the consternation of my really smart semiconductor expert friends, which is that of Intel, where Intel just kind of hangs out for a year. What makes you wonder, are they going to get their shit together or not? So looks more like United Healthcare is going to be the latter. And if you notice, I've got a, what I did was I closed out that hedge because, the premiums mostly expired. And yeah, we're starting to get down into the valley of risk. I don't like it anymore. I don't, because I don't want to hang out in it. So it's up to you if you're in UNH, what you're going to do. But I'm going to start looking for an exit next week because it closed below the 50% of this recovery. Let me just clean this up a little bit. What I mean by that is you have the low to the high, which was here, and this is on the daily. Yesterday, it held that level, but it's trending down. And so now at this point, what you have to assume is it's going to try to retest that low down there. And so do you want to stay in it all the way down to that low? I don't think you want to. So yeah, I don't like it. I mean, was it like $8 billion, $14 billion company? Is it going to come back? Is it going to go out of business? No. But if I'm trading it, I don't like losers. I don't like losers. So do what you want. All right. Let's see. Symbols. Let's see. QCOM. Ooh. Qualcomm. On the weekly, it's in the value of risk. I talk about that a lot. Basically, what do I mean by value of risk? You have a nice objective trend and a 50% level where half the people are in, half the people are out, and you buy it there, you put a stop underneath it, and you see if you can get it back. But if it breaks below it, you exit, because otherwise you're going to be stuck for years going through here. Do we have a volume profile level? I don't know, man. It's not particularly interesting in Qualcomm. I don't see a setup here. Let's see where the volume profile is up to this point. Yikes. Hard to say. Not a slam dunk on that. Not a slam dunk. All right. PG, Procter & Gamble. So on this one, I like how it's coming down. I want to figure out, when's this company dead? When is it dead? Let's go back to 2020, and we need to set an alert all the way down at 137. It needs to die some more. That's actually a really good level to alert, by the way. When I say 137, create alert. I did this in Thinkorswim because it beeps at me. This is what I've been trying to do, by the way. I've been trying to set up these long-term volume profile levels so I can catch things like Whirlpool this year, Hershey's, Mondelez, Dollar General. These are all multi-year volume profile levels. It's been really doing good for me. Let's see. What else? LMT, Lockheed Martin. Trump said that he's going to be sending some more arms to Ukraine. Must not be Lockheed Martin made arms, because it's really not going anywhere. Where's the volume profile of this level? Is it holding it? Oh, look at that. Well, kind of messed around here, but ping, ping. You got 3 holds of that volume profile level. The key level is 446 to hold on Lockheed Martin for sure. All right, let's see. Apple? Nobody's really screaming about Apple anymore. Is it just, oh, well, that's why. It's not making people as much money. Ooh, this is an underside hit of, this is an underside hit of 50%. That is bearish. That is bearish. That is bearish. Yes, NVIDIA is the new Apple. I might want to take a little bit short on that. That's, oof. I mean, look, I have right now, just personally, Samsung laptop, Samsung tablet, Samsung phone. If you ever get a phone with Samsung and you get in the ecosystem, you can they give really good trade-ins on their hardware when you get it. And of course, I've always had non-Apple products. I had Windows OS phones. I've just been kind of, the hipster, it doesn't matter now. It's all brands. Either way, you're brand loyal to Google, you're brand loyal to iPhones. Yeah, I love Samsung products. They all integrate together. They all work, and they all have some of the best cameras, fastest processors. Samsungs are really good. And I told my fiance, when her phone dies, as it is, because the battery, you know how batteries are, everything goes bad. I said, when it finally dies, you're getting a phone. I'll get it for you, but it's not going to be an iPhone. And she was not very happy about that, but that's what she's going to get, because yeah, I mean, we're gonna be a Samsung family, because what happens is, like, I've got my I don't have it in here, like one of those folds, I can go and trade in the old Fold 6 that I have and get the new 7, which is much there. Oh, just as a kind of a note, I know we're talking about Apple, but the bottom line, Monday, I'm gonna see if I can get a little short Apple, honestly. Yeah, especially as that little hit right there. See, this is a nice situation where it's either going to break it and make me wrong, or it's going to hold this 50% and try to retest this low right here. But I'm not going to attach a narrative to it about, how their products are just repeats of each other. But yeah, NVIDIA, woo, yes. I tried marginally successfully, made a little bit, but obviously not a bunch, trying to take puts out this year because everybody wanted to get into NVIDIA earlier this year. And I thought to myself, okay, it's NVIDIA. Every other couple of years, every few years, you're going to get yourself a nice 60% pullback on it from the high. Turns out in April, we only got about a 43%. Again, this is why I don't chase things, because you're going to get a deep discount at some point when everybody's wanting to buy. Like at the beginning of the year, everyone was telling me, they weren't asking, hey, Nora, should I buy an NVIDIA? They were like, hey, I'm buying NVIDIA. And there's no better way to get me to stay away than to have so many people hitting my DMs up telling you something like that. I'm sorry. I'm using you as an indicator. Just I think you're really smart. I think you're great. You can be a great trader, but when you're chasing what everybody else is doing, I'm listening, and everyone's the market. I'm the market. I'm the market. I kind of almost went. Speaking of which, I kind of almost went tilt because if you guys know, I feel like I'm Michael Burry with MicroStrategy, because I keep on keeping on thinking that eventually this guy that's going on CNBC telling people, hey guys, give me your money. No risk to you. I take your money. I buy Bitcoin. You take no risk and you just make all the profits. I mean, literally he says this. He says something to that effect a couple weeks ago. And it's just like, these things don't end well, guys. Okay. You got somebody that was, accounting fraudster 20 years ago. He's a tax cheat. He's not exactly the poster child for sound money. Okay. He's like a guy at a party that, is like, it's this real fun guy, he's like a really flashy life and everything. And he's like, you always know he's been in trouble with the law, in trouble with the IRS. And he's like, hey man, you know that thing you really believe in? If you just like give me some money, man, I got this thing going on. Like, I'm gonna make you like a lot of money. Just give it. I just need a little bit, just have some faith in me, man. This time I got it. This time I got it. But it keeps working. But I ask a friend outside myself, trader I respect. Hey man, like, oh yeah, still short, still target of 0. And he said, well, this is early in the week. He said, well, you got a divergence going on. And I'm like, what do you mean a divergence? And he said, well, and he uses things like RSI. I don't use RSI. But he pointed out to me that, highs are going higher, but the RSI was going lower. And he actually said, yeah, you're probably going to get one more push up, sure enough, in the middle of the week, and then it's going to fall off. Guy's a genius. Guy's a much better trader than me. But yeah, and so what I like to say here, if I'm a trader and I don't care about any narratives, that's exactly what happened. You had a failure to really push higher and then a sell off here. But what I think actually happened, this is the narrative that I want to put on it, is the Bitcoin breakout. It started, and then this week it kind of stopped. And this doesn't make anybody happy, okay? I mean, look, you got a little 10% move, 10%, 10%. 10% is not going to buy you a new house. We need 1 million Bitcoin this year, bro. And so I looked at the Sailor tracker and saw he hasn't bought any Bitcoin in like, what, about 3 or 4 weeks. So I like to think that he said, okay, we're at a high price, diluted his shares to go get some cash to buy some more Bitcoin. And this is going to keep on working as long as people think Bitcoin is going to go up. But what happens if the stock market, which is at all-time highs, starts to do a pretty deep retracement like maybe it did in April? Well, because stocks are all correlated, the ETFs are correlated, MicroStrategy's and the NASDAQ, That's going to bring down NASDAQ, reduce the ability to do that. Not that I think he's going to stop anyway. And now Bitcoin's tied to the stock market. It always is as a risk asset. But you know what? I'm just talking my book. So far, I've been wrong. All right. I was actually saying this week, Zygor, somebody talked about this Bitcoin protocol they had figured out where they were going to take two phones connected with Bluetooth, and now they can use like an eCash protocol, which is like a layer 2 of Bitcoin, to like send Bitcoin like across phones to each other. And I kind of did this thing where I went in old man voice, like, back in the day, it had to RDP through my Windows OS phone into my home PC, and then I'd have to use my stylus, and I'd have to type in the actual sending address while I'm sitting there with my friend. We'd call them out and be like BE34GX, and then hit send. And that's how we used to send Bitcoin back in my day. Yes, I actually absolutely had a Windows OS phone before Android. They were good. They were good. I mean, had all the Windows apps like mainly RDP because I did a lot of tech work. That was what I was doing. I was working in tech, and being able to RDP to a client server on my phone, I felt like I was living in Star Trek. So, Blackberries, the Blackberries didn't do it. They didn't. They couldn't RDP. They didn't have Windows RDP. Couldn't use it. Couldn't use it. Let's see. All right, so let's look at a few more, and then I'm gonna call it an evening. Comcast Corporation. Kind of a utility. It really is a utility, honestly. I always say when you're talking about like necessities of life, internet is a necessity of life because you can't do anything without internet. One cannot live without internet. People are like, well, what about water? It's like, well, you can always go to the store and buy a bottle of water. You can't go and buy a bottle of internet. So everyone's always going to need internet. That being said, it's very competitive and, not a great business because, it goes down a lot. People get pissed off and your customer service sucks. It's hanging out. Where would I say is something where it's kind of like it's already kind of almost been, let's see. So this is, again, this is an example of how powerful volume profile can be. Because if we do a volume profile analysis going back to, the trend up, all right, this is a weekly, so it's a very long term. We can see where it's dead level would have been about 29.34. And that would have been where it hit back in October 2022. We're well beyond October 2022. So where is it now? It's still down there. That low at 29.34. And so that would kind of constrain it within this range right here. I don't think you're going to get a huge YOLO gain off of it, but I wouldn't buy it until it got down to 29.34. And you had that major volume profile level. Maybe possibly if you wanted to be really, really cheeky, the 27. But just kind of hanging out. Does it pay a dividend? Yeah, it does. Not much. Yeah. All right. PayPal. And PayPal is something that I think I don't like it. I'm mad at it because I think because I had this in an account that I didn't really pay attention to. And I think I bought it at about 188 and I didn't notice it until it was down to 100. Unacceptable. Unacceptable. I didn't have a stop loss on it. Small position, like, few shares, but just kind of hanging out. Looks like I've already done an analysis on it in the past. It's also just kind of hanging out at its level here. Trying to push above it. It's just kind of hanging out. Don't really see a thing that I really like that. Nike is interesting. It's past though. Nike is interesting because it did, in fact, have a major volume profile level at 52.32 from the big leg up, multi-year, going all the way to 2013. I think it almost hit it or barely missed it. Yeah, actually, it did hit it. It hit it back in April. It already hit its like major. This is a big miss. I wish I'd been watching this actually, because these are the things I really have started looking forward to now, which is finding these multi-year volume profile levels. When I first started doing this, my friends that I learned volume profile from said, "Oh, you can't use volume profile on a weekly, especially on stocks. So much changes." But it tends to hold up dead stocks pretty well. At least give you a nice little rebound. And the whole idea from these things, from a long-term like portfolio perspective, is getting them when everyone thinks that they're dead, and you already know where you can kind of draw your price targets going into the future, right? And this works on anything, crypto, everything. Here's another interesting thing. Look at this. So, where did it come up to here? The volume profile from the leg down. Same thing that Whirlpool did. And I had some friends of mine that were in that, and they were like, "Hey, like, I'm tired of it not winning." And hit the volume, multi-year volume profile, 75.53. Hit the down leg volume profile, 108.72. Boom to boom. What I've said on Discord about this is Trader Me wants to take profit at the volume profile on the leg up. Trader Me wants to do that. But again, this Whirlpool is a dividend play. And so I'm happy that I got it at a very low cost basis, and I'm going to try to hold it for long-term capital gains. But we can see what the proper trading is to do. And so I may be just coping with me saying like, I think I'm just being coping for being lazy, and just, I mean, I'm aware, I look at it every day, but I'm just like, I don't want to take the short-term capital gains. I want to hold it for dividends. But what this is telling me, and again, this is not Nike. There's also Hershey's, which also picked it up at around the 148. And then where did it do? It came and hit the volume profile of the leg down once again. Mondelez is one where the volume profile that it hit, where is it? It's actually above it. So but it's a little bit different chart, but still the volume profile is actually kind of holding it and supporting it up at 65.85. So sometimes it'll break it, but these are like 3 examples this year: Nike, Whirlpool, and Hershey's. What's the other one? Dollar General. So Dollar General is one that has been holding the gap level, the gap down level right here, 114. And so I did actually close a little bit of my Dollar General just to resize that, because what do we get at Dollar General? Like a 50% move. So I kind of like want to trim that position down because it was getting really overweighted. I did that this week, actually, around this level. But yeah, I'm starting to kind of build out this has really been impressing me doing this. And the thing is, we're in a bull market, okay? But these are coming down. These are still like dying stocks, if you read opinions about it, coming down to these levels and being great buys, which then can benefit from the bull market. I like this. I'm going to keep doing this for years and years to come, because these are long-term plays, obviously multi-year low stuff. But I need to figure out, how do I manage the obvious targets, which are also based on the volume profile. So thank you for reminding me of NKE, because this is another example of like a very cut and dry strategy. Look for a multi-year, going back a decade or more, 15 years or more, volume profile. Try to grab it off that bottom, and then play it back up to the volume profile above it. 52 to 77. Beauty of it is, you take some profit, you don't care, and you can see if you can get it back up. I'm greedy. I want to have this thing and then come back 2 or 3 years. Well, not Nike, but all the others, but you can come back and hold it, and let's see if we get 170 again. Let's see if we can buy it at 52, and a couple of years from now, we're like, wow, we got it at 52, and now it's at 170. And so, but you know what? The good thing is, this thing could be going through a pullback that you can grab. You know where the floor is. You know where the floor is. You know that you can put a stop below that low, and that's where your risk is going to be. So, yeah, and Nike coming back could be a really good thing. I'm going to make a note of that. Thank you. Thank you. Thank you. I knew about this because some of my friends are in it. I'm not. I kind of missed this. And so I'm kind of like, Romo, regret of missing out. Yeah. All right. Lulu. I just listened to see how you're going to spin the new BTC all-time high. Well, thank you, man. What a great friend you. No, give me shit. Give me lots of shit. I'm so freaking wrong. So freaking wrong. But I'll give my I'll close on the other thing right there. All right, so Lululemon. See, I like things like this. See, I can't buy Bitcoin, but I can buy things that do this. I just can't. I can't jump in and do what everyone else is doing. That is breaking the 281. Don't like the 50%. What do we got for volume profile? Ooh, that's you see, we've seen. I mean, that's 516 high down to 52. I guess people don't need yoga pants anymore. But since it didn't hold the 281 50%, I mean, it did. It's a really good example of it. From the low in 17 to here, you have a really super nice hold to the 266 level. Great example of 50% play. But you made a new high. You hopefully took a little bit of profit. And now it's not doing what it should do. By the way, when something does this, when it comes down to 50%, comes back up and does not make the high, that is bad. That is bad. And that's why you get something like this. You want things to go up forever. I know that's kind of, it's kind of a frou-frou thing to say, but yeah, that's a problem. That's a problem. That's a problem. All right. How am I going to spin the Bitcoin all-time high? It's going up, and you don't try to pick the high when something is doing as it is. It fit all my criteria for a breakout. And so I'm not going to bet against it right now. I'm not going to call for any targets because you have the big green dildo, and the big green dildo bar on the weekly says a breakout is underway, and you don't doubt it. That being said, at some point, Bitcoin is going to have a bear cycle. Why do I know that? Because it's done it 5 times before. This time is different, Norok. It's always different. It's never different. And in the past history, Bitcoin has had, well, the first time was a 95% drawdown. I actually was in it then. I saw my $20 Bitcoin go down to 194 low. Okay. See, I've got a little PTSD. That's why I can't buy into something like this at this point. But I will stay a price for them. But, okay. So the first drawdown in Bitcoin was 95%. Next one was about an 80-something percent. I've done this before, but it's basically drawdown 95%, drawdown 85%, drawdown 75%. Okay. And one of the reasons it's been contracting or going, see, not contracting, but going down is because well, the volatility, the realized volatility of Bitcoin is going down due in part, I think most people would agree, to the fact that the market cap is now $2 trillion. Okay. It's hard to move. It's a lot easier to move a $5 billion thing than it is a $2 trillion thing. So let's see. Do I have, is it the Bitcoin maxi chart? No, that's not it. Hang on. So I have a logarithmic chart, and I don't use logarithm for trading, but it's good for doing stuff like this. But it's always kind of a little bit subjective. Okay, there. Why are you doing this to me? Oh, it's weekly. Okay. There we go. I think. See, I gotta go and like redo stuff. Anyway, people draw bananas. It's a banana chart, right? Banana. And what you can see if you do a logarithmic chart of Bitcoin is that the highs are going higher, obviously. The lows are going higher, but at a declining rate. And so we're coming into the 4-year cycle based on the halving. And everyone has been pretty optimistic. Everyone's known at some point, likely, that the cycle is going to end. Now, I talk to friends that are very, very bullish. They're like, I don't believe in the cycle. I'm with you. It's only happened, really 2 or 3 times before. It's not really statistically significant. Hold on, I'm trying to find my one that lived there. I just need to redo it, I think. But what I'm trying to get at is this. Bitcoin is going to have a drawdown, and it's going to be commensurate with volatility. Volatility's been going down. And so if we're going to be conservative, that drawdown, rather than being 95%, rather than 80%, let's just say it's going to be 60%. Okay. So what does that mean to me? That means to me that I just update the price where I think Bitcoin is a good buy. Because remember, I don't chase. And so the price for Bitcoin is a good buy to me now. The price that I think Bitcoin is worth is about 48K, right? That's 60% or 65, which I think is probably more likely. And this is, of course, going to be updated with new highs, which takes us back to what? It takes us back to the ETF launch. And this is what I've always kind of said. It's sort of like I think this is an Elon Musk phrase, the most ironic thing is the most likely thing to happen. I really do think that all the people that bought from the ETF are going to go through this nice, happy time, and then they're going to actually be tested. It's just another. I do believe that, and this quote that I heard, which is there's no such thing as a law of conservation of fortune. In other words, just because you take a drug that gives a benefit doesn't necessarily mean there has to be a side effect. Okay. But people kind of assume that there's like this cosmic justice out there. And so I don't want to fall foul of that, but it would be like ironic if all this money that's been pumped in for one reason or another, stock market going down, Michael Saylor blowing up for some reason, being indicted for fraud once again or something like that. If it were to kind of start to blow up, come all the way back and really test those ETF buyers, see how much they believe in Bitcoin, that would be kind of delicious irony, I think. Or it could go to 1 million. But then if it did go to 1 million, so a lot of people think it's going to go to this year, by the way. But let's just say it goes to 300,000. Exponential growth between the end of the year. What is 65% from 300,000? Right back to about 100K. And then once you have the benefit of everyone, for whatever reason, they say that it's dead. It's the meme. It's like Bitcoin crashed to 1,000, Bitcoin crashed to 10,000, Bitcoin crashes to 100,000. Okay, I'll pick it up at the crash. It's going to happen. It'll be a much better time to buy it. That's how I'm going to play it. Michael Saylor was not indicted for fraud. I know he wasn't indicted for fraud. The SEC, that's why I try not. Okay, yeah. Thanks for catching me. I try to be real careful about that, not misspeak. He wasn't indicted. He wasn't convicted. But the SEC came and said, hey, you're doing some shady shit with your books. You're realizing profits before they even happened, just like a lot of tech companies started doing to inflate their share price. Inflating their share price. Also, why would he inflate his share prices? So that he could issue convertible notes. Sound familiar? And then the SEC came in and fined him, and they didn't admit any fault, but he paid a multi-million-dollar fine for accounting fraud. They settled. Yes, okay, they settled. They paid it. They paid it. They made a donation to the friendly SEC, keeping us all safe. SEC keeping us all safe, coming in after people have lost a bunch of money, issuing fines, maybe making some arrests, not doing anything preventative at all, but making us pay more in fees for everything we do, just so that they can have a job to come in and be like, you did something wrong. We're here to protect consumers. We don't actually protect them. We just come in after the fact and prosecute people that are bad. Give us more budget. We agree. But oh well, what are you gonna do? Sorry for blasting so much. No, man, I love looking at stuff and getting opportunities. I've got a lot of Whirlpool. Whirlpool absolutely comes from this live stream. It was a 2020 3 live stream that we did, and I set the alert down there based on volume profiles when I started looking at volume profile, and I was from a regular Discord user, and yeah, we that's where it came from. So love you guys pointing that out. All right, so but yeah, one more final follow up. So Ichimoku Daily, it is undefeated in the let's call it position management of Bitcoin, where if price and momentum if they break out and they're above the cloud, it is bullish. Or if they are both below the cloud, it is bearish, and you can cut your position, get out, go to USDT, and just kind of just don't say anything. What that does is it brings the cloud up this high. I mean, all this does for me is it brings up the levels for Bitcoin. It moves them up, all right, for when I think it's a good buy and when I think that the trend can possibly flip. Before, the trend, if it had continued on, it would have gone bearish about 95. Did not happen. If it had gone down here, now the trend would have been about 100K. That would have flipped to bearish. So now, roughly, depending on what happens here, the bearish condition is 108. Now, what happens if it goes up? That means that cloud comes up too, and that means that the bearish condition becomes here. But at some point, just as it has in the past, nothing goes up forever, especially Bitcoin. But my maxi friends would say nothing goes up forever except Bitcoin. We'll see. All right. Thanks for hanging out. I'll talk to you guys. Oh, next week I might be out of town. We'll see. We'll see. But if you want to come hang out and talk, see trades that I put on, see me complain and consistently be wrong about Michael Saylor blowing up, come join me on Discord and do all this stuff. So have a good weekend, guys. Trade wisely. Bye-bye.